3M is planning to cut 6,000 jobs as part of its global restructuring plan. And this year, they already cut 2,500 jobs. But that is just a tip of the iceberg. There are around 260,000 lawsuits pending over military earplugs that allegedly did not work properly. So 3M filed for Chapter 11 bankruptcy on behalf of its subsidiary Aero Technologies. And that way, they want to save the company and not pay all the fines. But it is not that simple, because such a move may not be allowed. And then 3M will have to go to court around 260,000 times, and 3M has already lost 10 out of 16 cases that have gone to trial so far. And they have to pay $265 million in compensation. So how big a problem is it for 3M? Well, let's do the math. $265 million in 10 cases. That is $26.5 million per case. They lost 10 out of 16 cases so far, so around 60%. And they have 260,000 pending cases. So let's assume they will not lose 60 but 50%. That is 130,000 cases. And let's assume they will not have to pay 26.5 million, but 25 million per case. Then they will have to pay a total of $3.25 trillion. So the bankruptcy of Aero Technologies is probably the only course of action for 3M. But it may not be allowed by the court, and it also raises some moral questions. And if they settle with the victims, it is still going to be for billions of dollars. But maybe they can afford it. Let's analyze and value 3M and see, is it an investment opportunity or an investment trap? Individual insiders. That is an X with just 0.03% of the company owned by individual insiders. And we would like to see this number over 2%. So that is very disappointing. And are individual insiders buying? That is an X, but not a big one. We see only one transaction in the last year from individual insiders. And that is a sale transaction of around 6,500 shares. And do super investors own this company? That is a check. There are 4 super investors that put their money into 3M. And are they buying right now? It is an X. In the last 2 quarters, we see that Jensen Investment Management sold almost 1.3 million shares, which makes up around 94% of its investment. And Thomas Geithner bought 24,000 shares, so he added around 8.7%. Return on invested capital. That is a check at 19.7% 10-year median returns. And we want to see this number higher than 10%. So that is almost double that. Very nice. And free cash flow growth? That is an X at 0.5% 10-year compound annual growth rate. And just as with return on invested capital, we would like to see this number higher than 10%. So that is a very poor growth. And what do we know about net profit margin? It is a check at 16.3%, and the industry average is 13.2%. So that is nice. They have some serious pricing power over the competitors. And now let's take a look at share buyback. It is another check with 20.5% of the company's shares bought back in the last 10 years. So that is a very positive news for all the long-term investors, because They became owners of a bigger part of this company without having to spend any extra money. And the debt, it is an X. It would take 3M 3 years to pay the long-term debt with a current free cash flow. The dividend yield is 5.9%. That is a very attractive yield. We are getting $6 annually per every share. And the payout ratio, that is an X at 63.4%. And we want to see the payout ratio somewhere between 20 and 50%. So such a high payout ratio may indicate that the company is paying too much money through dividends instead of allocating it to other needs, like paying for all the lawsuits that they may lose. Okay, and what do we know about the dividend growth? It is a check at 4.1% 5-year growth rate. So the growth is nice, but what is even more important is that it is growing for 64 years. To value 3M, we will estimate its growth for the next 10 years and we will make 3 scenarios: low, medium and a high one. So in the low scenario, we will estimate a growth of 1% for the entire 10 years. In the medium, 2% and then 3%. And in the high scenario, 3% for the first 5 years and then 4%. And the reasons for such growth rates are the results of 3M for the last 10 years. Revenue went up by 1.4%, free cash flow by just 0.5%, and earnings per share by 4.9%. So we are keeping it in the same ballpark. And with such estimates, the intrinsic value in the low scenario is $74, in the medium, $84, and in the high scenario, $91. But these are not the prices we should be looking for, because we have to always add a margin of safety. I use a 30% one, and with such a margin, we get, in the low scenario, $52, in the medium, $59, and in the high one, $64. And the current price is around $102. So it is all in the red, even without the margin of safety. 3M is a very interesting story. On one hand, we have a company that is healthy financially, that is buying back shares, and that is paying a big dividend for over 64 years. So a company that really takes care of its shareholders. On the other hand, it is a little bit too expensive at the moment. But more importantly, it may be in a lot of trouble because of the lawsuits. And I mean, really serious trouble, not just a year or two with losses. I mean, trying to survive kind of trouble. So for now, it is a stock I would stay away from. But depending on how the story unfolds, it may create some very interesting investment opportunities. Thanks for watching and see you in the next one.